Okay, I know why you guys are here. You're looking to get some free Forex help, Forex trading, assistance, and we're obviously going to get into that. But before I do that, I wanted to take this moment to ask you for your help. I have a friend that's going through something. They've created a GoFundMe. I've done my part and I've reached out to the community of people that I've helped, the community of people that I can reach to do their part, whatever that could be, whether donate $1, $5, $10, $20, $100, whatever you can do. And if you can't do that, then at the very least share and like the post so that it gets out there to different communities and we can actually help these people. They're going through something right now and they need assistance, and I'm doing my best to do this. So by me making this video, I'm asking you, if you get value out of this video, anything you can do, whether money or your positivity, your vibes, liking, sharing, whatever you can do, okay? So let's get to work. By the way, if you don't have Facebook, I will send you the link directly. Just message me on Telegram at Gustavo Zaps, or on Instagram at Gustavo Zaps. All right, you can find me at Gustavo Zaps on any single platform. So let's get to work. Start Telegram. Okay, so over this last week on Instagram stories, I've been posting a lot about gold and GCAD. We haven't really been approaching GJ this week just because of the way the flash crash was looking and how everything was looking. So we're going to focus on this video on GCAD. The video is going to be about 10-15 minutes, and we're going to talk about market structure and trend lines. Now, a lot of the times people disrespect structure. They disrespect the market for what it is. You know, they try to make up a way to get into this market and to kind of what I call pip dust the market. They like to like peel away whatever they can. They over leverage, take little pips because all they care about is making money. And that's the fastest way to lose money. The easiest way, or I guess the simplest way to make some money on the market is to trade what you see and not what you feel. Also, trade with appropriate risk, something that you can emotionally handle, let the trades play out. Because the market needs to do what it has to do structurally on every single frame in order for it to develop the trade that you're looking for. So if you're looking for a higher frame playout, then that's going to take a long time. And I've spoken about this on other videos. If you're a student watching this, you already know this. If you're in the Pipsology community, you know this as well. But if you're new to my style of teaching and my style of trading, I'm letting you know that in order for a trade to play out structurally, it has to run through structure on every single frame. So if you're looking for a higher frame playout, something of larger volume, you know, daily, weekly, a big move that's going to last over days and sessions, that's going to take some time to develop. You can look at it like manipulation. You can look at it like it's, you know, gearing up, like fueling up for the trend, you know, getting better prices, stopping people out. However you want to look at it, just know it's going to take time. So most of the time when you're not there for the trade, it's because you're trying to go faster than the chart is gonna allow you to go. So let's look at GCAD. At the beginning of the week on GCAD, we were looking for a downtrend. Now, as I always am in the beginning of any move, I am very reserved. I was waiting for the up to the down. Okay. Now that's a common thing, right? Waiting for the market to retrace and provide you what it is it needs to provide you. So by the end of the week, though, what we were looking for, once I didn't get the up to the down, what I wanted was that zone right there. The reason it's wide is because we haven't reached it yet. Once we reach, then I can tell by waiting for the candles to print, I can tell exactly where I should be looking for. So if you look at these two screenshots, this was the before provided. This is the after. Look at it. The zone purposely thins down. The trend line is still the same. Trend line is running 1, 1, 1, 2, 3, 1, 2, 3, and then boom. Okay, so nothing changed. The only thing that changed was my zone narrowed because I got to price. Once price reached, what do? I let price print. Can you aggressively play it out? Of course you can. If we go up, you'll notice that earlier in the week, not Thursday night to Friday, but Wednesday night to Thursday, I was buying on GCAD right here. Actually, let me go higher. Where are we at? All right, right here. This was an earlier buy on GCAD. I think it was like the second touch or something along those lines. All right. So basically, guys, what are the two things you just learned if you're not paying attention? One, you have to let the market print in order for you to decide where you want to buy or sell from. Meaning you have to let candles create and show you their bodies and wicks in order for you to see the preferred price. You're too busy trying to get in the market that you're not able to actually be there to see the obvious trade. Some things after the fact are so obvious, and you would have been there if you would have been patient enough to let it print. But too many people are out there trying to guess the top and the bottom. Now, if you know my style, you see it all the time. I take hairline trades where it looks like I picked the top and the bottom. But if you're really paying attention, what you'll notice is when I take a trade, it's already been there. It might have been there a month ago, it might have been there a week ago, yesterday, but the market has already been in that particular zone. When it looks like a reversal, trust me that it's not. Okay, there's a major difference in knowing where the structural integrity of the market is, where it's most intelligent for you to get in, and where you're just guessing, right? Where you're just using logic like the following. It has to reverse here. It's gone too far. It has to come back. The market does not like to extend that far. The funny thing is that is true in concept, but you don't know exactly where that's going to be if you don't know how to analyze a chart, mark up a chart. So we're going to work this GCAD trade real quick, and if we're feeling fancy, we may do some of the gold from earlier in the week, which was a sell. Where are we at here? Sorry, I got to scroll through all this value that we give inside of this group. Give me 1 second. Look at that. Good call on GCAD. That's the earlier one. That's the one with 80 pips. See, buyer zone, boom. And maybe like an hour later, we were up 45 pips. Where are we here? Right here. 45 pips, and then it just started going higher and higher, and it basically maxed out at about 70 something pips. And I'll show you that as well on GCAD. With gold, if I can actually find it. Jesus Christ. With gold in the beginning of the week, we were selling. Check it out right here. We were selling. Friday, I think it was Friday or Monday, we caught that sell. On the retracement, we started forming structure, right? We had already been here, so I was still selling this bad boy, and we sold the whole thing. And then we started forming structure on the bottom in a bullish market. You have to respect this. You have to respect what's forming here in a bullish market. Yes, I'm selling. Yes, this is 200 pips. Yes, this is 110 pips of trend. I'm feeling good. I'm feeling profitable. I'm looking profitable. But the thing is, the market started not cooperating, and you have to be able to recognize it. This is an hour chart forming candle by candle by candle. Okay, so let's look at the market and let's break this down. Okay, so like I've said in other free videos, and I say on Instagram stories, and if you're a student, you hear this until you're hearing my voice in your head every time you trade. We look from higher to lower, right? That's a common thing in trading. That's not secret sauce. That's not some magic system. That is basics. Now, the thing that I've realized with trading is that basics does not necessarily mean that everybody understands it or applies it well. There are tons of things that are simple to say, simple to understand, but to do it is a different story, and that's where the issue is for most people. So the first thing that I noticed on the weekly was what? Before we even got going, what I noticed was we were heading up, and we've been up, 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 up for a long time. Okay? Weekly channel, weekly trend line, forming on the way up, right? Bring it down to the daily. What do I see? Okay? Same thing. Same thing. Now, here I see it a little differently. I see this. All right? Two trend lines, starting from here, touch, 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 touch. Now, where do people get messed up? They get messed up, listen to me clearly, they get messed up when they're trying to get perfection on the trend lines. To me, that's a mistake. I see it in every single blog, every single Instagrammer. I see it with people who come to me looking for help, brand new people, people who've been around. They're looking for perfection and for the chart to be as clean as possible. Here's the truth. The way you see the market may be slightly different than how I see the market. For me, the trend line was in 2 spots. Everywhere else was non-existent. For you, it could have been in 1 spot. And for other people, they might have not seen it at all. So it's all about how you mark it up and whether or not you're waiting for price to come to you. Here's a tip. When you go to trade and you make an analysis and you start to second guess that analysis based on emotion, you're already messing up. That's already going to lead to problems. When you do an analysis, you are already risking the chance of you not being able to trade that market if it doesn't work out. And the only reason for you to drop your analysis that you took your time on is if the market leaves clearly without you. If the market is already on the move and you were just off on the analysis or it never came back for retracement. An easy example of that is the Telegram. When at the beginning of the week, what was I looking for at the beginning of the week? What was I looking for? I was looking for a retracement, right? I was looking for, hold on, for the market to go up and then slash down. That's what I was looking for. I knew we were bearish. That wasn't a question in my mind. I mean, any schmo can look at this market and see that we're bearish due to flash crash, due to support, resistance. Bearish was the game on GCAD. The fact of the matter was I needed to get in from a place that I was comfortable in getting into GCAD on the sell. When we didn't get that, what did I do? Nothing. I waited for the market to come to me. It has to hit in a spot that I understand, in an area that makes sense to me. So let's go back to the chart. All right, at the beginning, let's go to that H4. Beginning of the week, we are here. All right. We're looking for the market to go up and come down. So I'm going to give it a quick area of interest. All right. We were looking for the market to come up and come down. What did it do? Supported on lower frame. This right here is a lower frame support. The market is creating 1, 2, 3, 4, 5, 6 tons of 4-hour candles. A lot of time is passing here where the market's doing absolutely nothing. If we look at it, market structure is forming. Right? A low and a high. That was forming. Once this thing broke, it's gone. At this point here is when I don't touch this chart for anything. Because it's easy to say, look, man, you could have just entered and continued on. I get that. I understand it. Whatever. But the truth of the matter is this, that you don't know when you're going to get a retracement of 45 pips. You don't know when you're going to get a retracement of 100 and something pips before it continues down. You have no idea when the market is going to exhaust, complete the cycle on the micro, whatever you want to call it, correct, and then come back. All you know is that you can wait for price to come back to you. So at the beginning of the week, we were looking for the market to come up and then slash down. It didn't do that, started forming a high and continued on the way down. So what did I do? I came to my lower frame. This is an H1, which I consider microstructure, and I just drew a trend line like so. All right. Now what that's telling me, it's telling me, hey, look, Gustavo, you got a channel forming just like that. All right. Somewhere, by the way, I'm drawing them sloppy on purpose to show you that imperfection is okay. It doesn't have to be perfect because you're not going to be perfect. By you letting the candles print, you'll be all right. Stay with me and we got this. So the market's working its way down. That's obvious. We're bearish. That's obvious. You go on any frame, bearish. Daily, bearish. Okay? Bearish, starting from here, going down. H4, starting from here, going down, right? We're bearish. We're on that lower frame. There's no way that I'm going to go bullish when every single higher frame is looking bearish in the immediate, right? And within the last couple of weeks. So, I'm sorry, the last 2 weeks. So, when we look at this market, we are running in the short term bearish. So, I didn't get the sell that I was looking for. What do I do in that instance? The answer is nothing. What I did was I went to another chart and I started selling gold. That's what I did. I called the gold trade. Right? You don't have to be on every chart. You just got to be on the chart that you understand. So GCAD is going downtrend. It is what it is. And then we get the first support. Right? Candles print. These are hour candles. 1, 2, 3, 4, 5, 6, 7, 8. Bum, 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 bum. Right? A bunch of hour candles. And first uptrend. 70 pips. It comes back. This is my call out. 109, 1600 hours in the morning time. Right? This is my call out. And then there's that. All right. I wanted a breakout of this trend line that I saw forming. I was looking for the market to break out. Now, a couple of things I want to throw at you. Why didn't I call it from here? Because I wasn't sure. But on the lower frame, I got that first push, 72.3 pips. That first bullish run in my direction. It comes back and retests. Creates another candle, and then boom, there we are. There's our 80 pips. All right. It comes back again, does it again. Now, what's happening on the lower frame in a bearish market? Are we paying attention to the way the candles are printing? Are we paying attention to the way the candles are printing? The market is filled with channels, miniature trends, monstrous trends. There's tons of levels being created as the market structures out. If we go to my favorite frame, which is the H4, it looks like a mess, right? The market's working its way down, wicks on the top, support on the bottom. What's going on here? Well, the easiest thing you can do is go down a frame and try to make sense of it. So if I look for areas of importance, what are my areas of importance on this chart? Right there. That's important. What else is important? Right there. That's important. What else is important? The fact that we started here, we finished here. Now, anything that comes near this zone is going to be important to us. Anything that comes anywhere here and here is going to be important to us. It's going to be important. Okay? So, we look at the chart for what it is. When the market came back down here, I was ready to buy. Why? Was I guessing? No. 1, 2, blah, blah, blah. All these big touches, hour candles passing. In order for this market to even think of continuing down, what has to happen? A correction. Even on the smaller scale, it has to happen, which for me, I cannot afford because I trade with a 30 to 40 pip stop loss. No more, no less. All right? Now, stop loss is another conversation for another day. It's not necessarily meant to always get stopped out. It's meant to be used effectively to be able to minimize the damage. But that's a different video, a different conversation. So we look at the market for what it is. So in this moment, on this day, during these times, the market's importance areas are right there, which is a range of about 80 pips, which is a good amount of pips. Many of you out there are going for 5 pips, 10 pips, 15 pips. You start crapping your pants at 20 pips. The market's barely farting and you're ready to get out of the market. No. Let it go. Let it happen. Let it breathe, as we like to say. So the market has 2 areas of diagonal importance. That one, all right, it's working its way down, and this one, all right, 2 of them. You should be able to recognize that. If you can't, go back and work the charts on a trend. You need to see it. What else is happening? We go to that higher frame. We look at the left side of the screen. What's been going on every time the market gets anywhere near here? What happens? It goes up. Simply put, it goes up. There is no sexy way to say that. Every time the market comes somewhere down here, it goes up. So what should you do when the market is in this particular zone? If you're selling towards it, you should start thinking of taking some profit. If you're looking to buy in it, what should you do? Do what we did. Do what I did. Let the market get there. All right, it got there, started creating candles. Truth be told, at this point here, I thought we were ready. I thought this is it. It's going to skyrocket. And then about 11 hours later, when we're still in this particular zone, guess what I'm thinking? This thing isn't going to go where I think it's going to go. This thing is getting lower and lower. If I look at these 3 little particular zones, is this looking good for my buy that's against the current trend? Is it really looking that good? As this market works its way down, I drew the trend line from here, and then it touched it again here, then it touched it again here, and I'm not happy because it sucks because I'm about to get taken out of this market at a +1. By the way, if you don't know what that is, that's when you take your stop loss and you place it in the profit margin 1 pip. All right. I had already skimmed out trades. If you don't know what that is, that's locking profit. As the market is working its way in profit, you should be taking something out so you get paid for your work, get paid for your patience. Those are things that you should be doing as an investor in this market. If you had a banker or an investor working your money, wouldn't you want them securing some profit as time goes on? Why aren't you doing that? All right. So we're working this market and we're here and I call it out and it goes up and it comes back and it goes up again and blah, blah, blah. The next day, why didn't I just buy again? One reason, GBP news. It was around, it was happening, we were starting to get volatility. I didn't want it, I was going to wait. I was going to wait for what? I was going to wait for better prices. Now the market dropped drastically, really quickly. 2 hours, drops about 70 pips. Now, if you look at the entries from my screenshot for the following day, because we took this and we took this, right? If you're trained by me, I mean, you guys have seen the screenshot, you guys have seen the names, those good people are students. The sharpness of the entries is just good habits. It's not magic, it's not an indicator, it's not anything other than they hold themselves accountable to good habits. When they go and they look at when you go and you look at the screenshot, right? Look at the entry, right? Look where it is. Look at the entry, all right? Look at the prices, right? We've been here before. I'm not up here. I'm not up here. I'm not somewhere here. I'm not even down here. Why? Because I wasn't sure yet. When did I realize, all right, we're good. We're good on this. Let's go back. All right, we go to that higher frame. The higher frame is what matters. The lower frame is just noise, right? It's just noise. Now, if you're smart about it, you can manipulate that noise to your advantage, right? You can work the noise. You can analyze the noise to make proper assessment of what's going on here and whether or not you should be crossing your fingers or letting it go, okay? Or at the end of the day, when you look at the chart for what it is, this becomes much easier. If you're trading with emotion, this is impossible. All right, so let's look at it. All right, let me clear this up real quick. All right, go to that daily. I want to draw that trend line. H4. Okay, and basically we were working here. All right, why is it that I didn't enter here? Because I didn't know if we were going to get that daily break. I didn't know. I wasn't sure. When was I sure? When was I ready? If we broke back above it. Okay, when this happened, and we were coming down here, yes, we could have taken the buy there, but I wasn't comfortable with it. My buy zone for the whole week was basically right there. So unless we broke back over, there is no way I could take this trade. When we broke back over, I entered at same spot, and then I just waited. What did I wait for? The break of the initial trend line that I had drawn on the micro frame H1 to break this one that I was using the day before. Let's go back. I gotta go all the way up. This screenshot right here. Touch, 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 touch. Remember this one? It ended up going a little lower. Touch it again, going a little lower. These are the entries, right? I was looking for that break. I was all over this thing. We didn't get it. As candles print, I take it for what it is. What am I gonna do? I'm gonna cry. I'm gonna add entries. I'm gonna hold and let it stop me out. I'm not gonna take out profit. I'm gonna cross my fingers. Doesn't work here. There's no such thing as luck. Well, there is, but that's why most people are not profitable. Touch, 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 touch. We went lower. All right, we went lower. So in order for me to enter again, what do I got to do? Right, I got to wait to hit my area of integrity. This is my spot. This is the spot right here. So as it broke over, it's looking real good. It comes back, creates that weak bullish candle, right? Minimal pin bar, almost. And then we were gone. Okay, now on the bottom of this, 70 pips that I had to wait and hope that it would come back. Now, what's really happening here in the bigger picture? Look at that daily chart. What's really happening? What's happening is we got a daily rejection. That's what's happening there. What's happening is the market did not want to break that low. It wasn't going to happen. It wasn't going to happen. Look at that candle on the daily chart. Look at it. Bullish. Look at it on the H4, right? Where does it wick? Same spot that I wanted all week, right? The market created the body right at where I wanted this market the whole week. But before that happened, 75 pips to stop anybody out from getting into this. But if you're smart, if you're patient, it'll be all right. Now, something you may be asking yourself, well, isn't it highly aggressive to get in here? Of course. Yes, it is. It is highly aggressive. But I'll tell you what. The first one was here. Why? Because of here. The second one was slightly higher because of here. What am I doing there? You look at the entries. What am I doing? What am I doing when I split the risk like that? Let's look at it. There's two entries here. This is my +1, the little red line in front. This is my other +1. Why is it two entries? Why is it two entries? It's two entries because on the first one I wasn't sure. I was sure about what I was looking to do. I had planned it out. I had told myself if we started breaking towards that zone, I started showing a push like an actual barrier break through that area, I would take the limit. I would take the trade. But I still wasn't sure. So it's called a split risk. Instead of entering the market with 100% risk, you can enter at what you're comfortable at for something that follows rules, is of quality, but it may not be the best, utmost, clearest trade of the world. Right? To me, if at the beginning of the week I had been looking at the market from a lower part, then it would have been great. But I wasn't. My bias was from here, which allowed me to take other trades. But at the end of the day, patience is what played throughout this whole thing. So when the market comes back, support's over, keeps going, breaks what barrier? Remember the barrier at the beginning of the week, right here? Remember that when I drew that at the beginning of this video, right? What are my areas of importance? This low and this high. What are my areas of importance? That high. What's my other area of importance? That high. That low, sorry. The market is 1000% going to allow you to enter if the trade is meant for you. You are the only one rushing. On this trade right here, call that out in the morning. Wipe the crust out of my eyes and call the trade. This area of the zone was desired. Once it gets here and creates a floor like that or a support area, that's it. There's no guess. It's there. Comes back, it's there. Goes through it, trade's dead. Period. Comes back, it's there. That's what we did. Trades are called out. Trades are in the group. Same thing I do every single week for a long time now. It's all about patience. And when you look at the chart after the fact, are you looking at it for what it is? Or are you looking here's another tip, because I know I'm bouncing around here a little bit, but I'm trying to get as much value to you as possible in as little time as possible. When you are studying the charts, start looking for things that are similar. Stop looking for every single trade and start looking for the patterns and the approach you understand. A lot of the times when new people are learning how to trade, they're looking at everything, right? I'm a higher to lower frame guy. I start on the weekly. I don't really mess with the monthly much. I start on the weekly and I work my way down. All right. I don't really use these lower frames much anymore because I'm getting old. But anyways, when I go to an H4, right? When I go to an H4 chart, this is what tells me what I'm going to do today. This is my favorite chart. And there are particular things that I like right? The amount of candles that are created, if it has Fibonacci confluence, some candle printing patterns that I like, certain channels forming, like that double channel. When the market creates a double channel, I like that. That's a good thing. It's easier for me to read for whatever reason. All right. So those things are for me. You as a trader, stop focusing on every trade out there. Okay. When you're looking at the chart and the market's here, like for example, for me, years ago, I would have said, why didn't it retrace up? And that's what I'm worrying about. Why didn't it come back? Right? Well, maybe I could have taken this. Maybe I could have taken that. Not my style. Not my style. I need a deeper retracement. That's more my style. I need the market to do this in a bigger scale. That's more my style. Are you looking at the chart for what it is or for what you want it to be? So again, this trade was pretty simple. It was just waiting for it to support and go up. The area was picked apart in the beginning of the week off daily trend lines, and the lower frames were picked apart by lower frame trend lines. That's not that hard to do. Support area and prices harmonious, using them, and then the break back over. The riskiest trade in this situation was the most valuable one, which was this one. But I had to let it break back over. I had to let it break back over, and I had to take my chance. And if it would have started trending back down, guess what? I'm going to cut it, and then I would just wait for the market to come back here in order for me to take the buy again. That's what would have happened. That was planned out in my mind the whole time. If this trade did not keep going during the same hour candle on momentum, and we would have stopped and froze here and worked our way down, immediately I would have cut that trade in minimal loss. I would have taken that small L, waited for the market to come back, form here, and then I would have taken it up. That would have been exactly what I would have done. I would have adjusted to the truth of the chart, not what I felt. Oh my God, I'm going to lose 10 pips. I don't care. Right? I don't care, because just how we won here for 80 and we win here for 70, we could lose here. Right? Not for 70 or 60, but for 20. Right? You got to be a bozo to be holding it past this point. Or you got to be somebody who's still learning. All right, let's go to gold. Gold, we were taking the sells at the beginning of the week. Quickly. Seller's integrity. Daily. What's going on here, right? I knew this was a sell point. This Fibonacci confluence is other things that we're not really going to get into right now. But that's what we were looking for. We look at it again, right? That's the highs. Now, if you looked at the screenshots at the beginning of the video, the first one has entries here. Why isn't it up here? Why isn't it right here? Because it's down here for a reason. Lower frame. 1, 2, 3. Boom. That's when I started dancing with the chart. This thing went for 200 pips and then comes right back. Why? Question is why? Go to that H4. Let's look at it. What's going on? Very, very bullish for a long time. We get to an area that I feel like is going to give us what I'm looking for, which is that sell. It comes back. We sold it again. Why? Because if you look at it for what it is, again, when did we sell it? Look at all this stall work here. Look at how strong the seller's area is. So I'm going to sell it again. What does it do? 120 pips on the downtrend. Now, why is it that on this one and on this one we just froze? What's going on? It's a buyer's point in a bullish market, like I said before. If I trade it, if I look at it for what it is, we're still creating slightly higher lows. That's not good for a seller. It's not a good thing. So what happens when the market can't get the breakout it's looking for? It goes back to where it started, or even higher. In this case, even higher. Right? It'll test that high. What happens? So the market started creating, so we can't sell anymore. I even called a buy after selling. Let's go back to the Telegram. That was the markup. Barely missed me right here. This was the first sell. This was the second sell. It leaves without me, right? It goes bullish. Again, there's your micro trend line. It comes back. I call for the buy. It missed me by 3 pips. It is what it is, man. This happened before the GCAD move. I don't get mad. I just keep going. That's it. That's it. It is what it is. But it's the same premise. I'm looking at the chart for what it is. I'm not making it up. I'm not going to guess, right? We're definitely creating higher lows. So if you're selling, that's not good for you. And this is days of work. At what point are you going to be like, you know what, man, I'm going to just TP this? Or I'm not going to sell into it like a lot of people do, guessing the breakout. I'm just going to stop. Once it breaks back over, is that good for you, trader of the sell? If you're selling here, you're creating higher lows, you're in a bullish market, is that good for you? That you had a trend forming and then all of a sudden pop? That's not good for you. Right? So you got to look at it for what it is. Now, easier said than done when you're new. But the easiest thing you can do is start drawing. Go to a chart, start drawing. Start drawing, start drawing. That's pretty much it. I wanted to throw some stuff at you as quickly as possible. There's a lot of, in trading, there's a lot of concepts. There's a lot of different things you got to learn. A lot of it is detail work and how you perceive it. When you start trading, the most important thing that you can do is stay consistent with your approach. If you are somebody who's using an EMA concept and you're using price action, higher to lower frame, continue to do that until it starts to make sense. Analyze your chart. If you missed a trade, you missed a trade. If you force yourself into a trade, that's a big no-no because you're not allowing yourself to learn whether or not you're analyzing correctly. You're not going to even be able to backtest because you're too busy losing. Let the market play itself out. You making money on this chart by you just throwing a trade in there is the dumbest thing you can do. You're gonna give your money away. Okay? So when you look at the chart, when you break down the chart, what happened? Why did it happen that way? When you analyze a chart and you win a trade, why'd you win? What could you have done better? When you break down the trade, where'd you mess up? Trust me that we all mess up. When I look at this GCAD trade, and I was working my way up, right? Where did I mess up? I messed up. I messed up when it created a lower high on the lower frame. When it did that, I should have watched the whole thing, and I should have known we were going lower. I missed it. I was too busy entering from here, but I never changed my approach. I didn't enter again. I didn't enter again when it came back because of this one. Thank you, Asian session. Once it did that, that's it. It's over, man. I'm not going to enter again from there. It's too low. Chances are I'm going to get a lower low. Once that happened and we came back, we're good to go. Once it broke that trend line, we're even more good to go. Once it broke this high, we're even more good to go. Structure, baby, reaches that high, boom. That's that. All right, guys, so I know I threw a lot at you. I was trying to cover as many topics as possible. I'm hoping that when you hear something, a keyword or something, you go and you Google it. Maybe you'll watch another video of mine. Maybe you'll start looking at the Instagram stories because I like to, this is the stuff I talk about. Nothing too crazy. I'm not using any special indicators that do it for you and, you know, give you the tickles every time it starts to set off bells and whistles for you to put your money in there. I'm a price action trader. I use tools that help me see the market for what it is, not what I feel. Right? I'm good at analyzing the chart for what it is, higher to lower frame, exactly what you see here. That's what I teach. When you see these guys who are profitable, you see these guys who are learning, it's because I teach them to, one, have solidified rules, right? Now, I'm not talking about you have to do this. I'm talking about if you're going to enter here, enter, but know why you're entering. If you're going to exit here, exit, but know why you're exiting. If you have a bias, that is your bias. If you have real information on the screen to cover your bias, that's what it is, right? No emotion on the charts. So keeping your risk in a place where you're comfortable. And that could be anything. I'm not that guy that's telling you, you have to trade 10 cents a pip if you have blah, blah, blah. No, you have to trade $1 if you have blah, blah, blah. I don't believe in that. I believe that everybody is different. And you can see the chart in your own way and still profit. One of my students took it from down here. I took it from up here. We both profited. Both of us. Because he saw it one way bullish, I saw it another way bullish. Guess what? Good rules and good habits kept us both profitable. That's what matters. So when you go out there and you start studying, make sure that you're understanding what you're studying and make sure that you're just not trying to take every trade. Make sure that you are breaking down the market for what it is. Make sure that you're starting to gather up your little concepts and tools, maybe chart patterns. Maybe you're a Fibonacci trader and you're always going to wait for that Fibonacci setup. Maybe you like channels, you're always going to wait for that channel setup. Maybe you're a higher frame guy and you're going to wait for the higher frame setup. The same look of this on the lower frame, you're going to wait for it on the H4 daily. That's fine. It's there. Okay? So sometimes some things may take a long time. Sometimes some people like speed trading. They like to go to that M15. I'm cool with it. I'm cool with it as long as the rules are there and the information is there. No throwing up the money just to see what happens. No experimentation. Real, rule-oriented, organized analysis on the chart. Whatever your bias is, picking the best areas to do that from, having similar situations over and over again. That's the nitty-gritty of this. That's the goal. All right, guys. So if you have any questions, you can reach me on Instagram at Gustavo Zaps, on Telegram at Gustavo Zaps. Please, if you've learned anything in this video, if I've given you any value in this video, please donate to that family that needs help right now. If you've ever had a loss in your family, remember what that feels like. Also remember the financial burden. Anything, 5, 10, 20, 100, anything you can do. We've all done our part, and if you're watching this video right now, you just got some free value, all I'm asking is for your charitable donation. And if you can't do that, like it, share the GoFundMe link that's going to be in the comments of this YouTube video. And on that note, happy trading.